Hello and welcome to the Global View on this Wednesday. I'm Andrew Gagan. Good to have you with us here at Ausbiz. Let's get across what happened overnight. Global equity markets rising for a second straight session despite higher oil prices, with energy facilities in the UAE and Iraq struck by Iranian drones, while Israel said it had killed Iran's security chief. Wall Street's major indices finished in the green as the Federal Reserve began its two-day monetary policy meeting, with it contemplating the inflationary effects of higher oil prices. Shares of airlines and travel companies rebounded from losses related to the war, with Delta and American Airlines both gaining after raising their revenue guidance for the current quarter. And Norwegian Cruise Line and Expedia also rising. Energy companies Occidental and ConocoPhillips rose, tracking higher crude prices. Nvidia closed lower as its optimistic sales outlook failed to offset investor concerns about a potential slowdown in demand for its chips. Amazon rose after Chief Executive Andy Jassy said he sees AI doubling AWS sales forecast to $600 billion by 2036. Ride-hailing app Uber rallied after announcing plans to roll out robo-taxis in 28 cities starting next year, powered by NVIDIA's autonomous driving software. Honeywell dipped after the industrial company said the Middle East conflict could affect its first quarter revenue. And Eli Lilly fell after a broken downgrade. Well, Israel claims to have killed Iran's security chief Ali Larijani, the most senior figure targeted since the beginning of the war, while Iran has rejected de-escalation offers conveyed by intermediary countries. President Trump has said that the United States was not ready to leave the military operation in Iran yet, but that will be leaving in pretty much the very near future, he said. Well, the ongoing conflict has prompted the American president to postpone his planned trip to Beijing to meet Chinese President Xi Jinping. And in the latest monthly survey of fund managers, the Bank of America has revealed a slump in investor sentiment to a 6-month trough, coinciding with a jump in cash levels from February's 3.4% to 4.3%. 45% of respondents forecast higher inflation over the next year, with interest rate expectations also jumping. Well, US Treasuries rose modestly ahead of the Fed's policy decision. The 2-year yield fell to 3.66%, the 10-year was at 4.19%. The Australian 3-year government bond yields fell to 4.54% following the RBA's split decision to hike the cash rate by 25 basis points. Markets have priced in a 55% chance it will be hiked by another 25 basis points at the next meeting in May, and around one more hike by the end of the year. The US dollar index was little changed. The Aussie dollar has risen around 0.5% to 71.1 US cents. Oil prices have surged again as renewed Iranian attacks on the United Arab Emirates heighten concerns about the worsening outlook for global supply. Oil loading at its main port was halted after the third attack in 4 days ignited a fire at the export terminal. Brent crude futures rose more than 3% to $103 a barrel. The gold price held steady ahead of the Fed decision. Spot gold trading at around $5,000 an ounce. Copper was up 0.5%. Iron ore rising more than 1% to 111 US a ton, and Bitcoin trading just over 74,000 US dollars. Well, joining us now is Ganti, head of US index investment strategy at S&P Dow Jones Indices, to get across what we're seeing in markets focused on the US at the moment. Anu, great to have you back on the show. Thanks for joining us again. So let's begin with that US market dispersion we're seeing, particularly given the heightened volatility at the moment.
Yeah, so you're certainly right to be thinking about volatility, because we've been watching just this significant shift in the volatility landscape. And if you think about it and break volatility into its two components, dispersion or cross-sectional volatility as well as correlations, through the end of February, we saw a significant rise in dispersion, particularly within the technology space. If you think about the pain points within software companies underperforming, as well as the chip makers outperforming. So we saw that widening dispersion. But then come the end of February and so far through March, there's just been this shift. And we've seen a decline in dispersion since then. And the market's focus has shifted, of course, to the significant geopolitical uncertainty that we've seen. Rising oil prices, inflationary concerns have taken center stage. So as a result of that, we've seen rising stock level correlations within the S&P 500. So really, it's almost as if we've seen the shift in terms of idiosyncratic risk taking a back seat towards that macro level risk. And if you put it together and look at volatility, we've actually seen a rise in implied volatility as well as realized volatility. But what has been particularly interesting is just the widening of that spread or that volatility premium, which has been really interesting to watch.
Let's just take a look. In fact, we've got a chart just illustrating the dispersion we have seen. Yeah, we'll see if we can bring that up. But to that point, particularly saying realised dispersion there significantly rising across the mid and small caps with the market leadership towards the smaller stocks. I'm just wondering though, was that prior to the outbreak of the conflict? Because clearly, with the prospect of rising inflation, potentially rising interest rates, that's going to be a negative, particularly for smaller stocks.
Yes, no, that's an excellent question, Andrew. And that was actually right at the end of the month, before the war started. So you saw that significant dispersion within mid and small caps. It is going to be certainly interesting as we produce this dashboard monthly to look at the end of March to see if those correlations start to pick up, because correlations have been historically low, just looking in terms of history, but we have seen them start to rise. We've seen volatility start to rise as well. What is particularly interesting is, of course, the energy sector and the shifts taking place as well. Because, for example, we can measure dispersion across the stock level, across the cap spectrum. We can also measure it at the industry level. And we've seen rising dispersion within the energy industry space. If you think about beneficiaries of rising oil prices and laggards who may be impacted by rising oil prices. So the energy space is really interesting to observe from a volatility perspective.
What are you seeing, particularly as related to tech and how that's playing out regionally? I sort of see you note there, especially across Asia, dispersion remaining high globally as investors trying to pick those winners and losers, particularly as a result of that AI disruption.
Yeah, so no, that's exactly right. When you talk about investors trying to pick out the winners and the losers and looking under the hood, but what our attention is shifted to right now is of course dispersion and as well as correlations, particularly thinking about it from a diversification perspective. And we talked about technology. If we also think about energy, it's typically a volatile sector, but what we have seen currently is it's actually starting to act as a volatility diversifier, sort of counterintuitive when you think about it. But if you look at the correlations between S&P 500 energy versus the rest of the market, they have been moving in different directions. So interesting time right now to be looking at sectors from a diversification perspective and for risk reduction.
Now, and obviously the sector that's really in focus at the moment is energy, which you touched on. So how would you rate its performance as measured by S&P Dow Jones Indices there, given obviously it's all been driven by what we're seeing out of the Middle East, particularly the closure of the Strait of Hormuz?
Yes, and it's definitely an obvious sector to be watching right now with rising crude oil prices. We've seen that the S&P 500 sector, S&P 500 energy has outperformed. It's outperformed across large, mid, and small caps. It's interesting to look at the industry space with oil and gas exploration and production outperforming our oil and gas equipment and services index. Of course, earlier I touched on the rising dispersion within S&P 500 energy industries. It has been interesting to look at the correlations. Just thinking from a macro perspective, we've seen rising correlations of energy, S&P 500 energy versus the US dollar. A big driver of that is just the positive correlations between crude oil and the dollar. Again, very unusual compared to the traditionally negative relationship that we've seen. Another unusual sign is, of course, we've seen treasury yields have risen. They did decline earlier today. But again, inflationary sentiment has been top of mind, which has been driving those treasury yields higher in the past few days. So we've seen an inverse link between energy and the treasury bond market. So those macro correlations are going to be interesting to look at as we get into tomorrow and looking ahead to the Fed meeting. And final point is just we've seen that defensive sectors have underperformed. For example, looking at consumer staples and real estate, again, very unusual in this environment.
I know, great to get across, particularly what we're seeing with the dispersion of volatility that's playing out right now. Thanks for joining us from S&P Dow Jones Indices.
Thank you.
Let's turn our attention to the local market ahead of the open here on this Wednesday. We're expecting a modestly positive start. We'll take that, given, well, we've just been talking about volatility, haven't we? Very heightened at the moment, with oil up yet again, up about 3% overnight. And despite that, we did see equity markets shrug that off. Maybe we're at that point now, well and truly 3 weeks into this conflict. Stay with us, we'll get across the open in just a moment.